Hello, this is Ed Burke with PlaceForTraders.com for Tuesday, March 17th. Starting off in the June S&P. In my last video, I talked about the pivot level of 750. We needed to stay above 750 in the June S&P for Monday for a bullish market. If we're below 750, we were looking for a bearish market. I had the first level of resistance at 763. The second level of resistance at 770. Also, in my last video, I had talked about the importance of either the second level of resistance or the second level of support, depending on the direction of the market, due to this tight trading range that we had on Monday. Now, in the overnight session, the June S&P traded as low as 749.5. It wasn't trading that low when the regular session opened. The market was trading more in the range of about 758. So the market showed a clear-cut bullish sentiment early on. We're above our pivot level. The market early on went up to a high of 771.30, just above that second level of resistance at 770. So it really kept you along with those two trends. That early bullish trend, we're trading above our pivot at 750. If you covered at 770, that second level of resistance, or of course if you even flipped it and got short at 770 and rode it into the close with the market going down to 754. Either way, it gave two clear-cut great signals. Sometimes when you're following along with these numbers, you have some ambiguity where the market keeps flopping on both sides of the pivot or something and with no real clear-cut direction. But there was two nice real trends, an uptrend and then the downtrend off that second level of resistance. For tomorrow, I have the pivot level at 759.5. I have the first line of resistance at 768. I have the second level of resistance at 781. Now for support, I have the first level of support at 746. The second level of support at 736. Couple other numbers just to take note of. The weekly first level of resistance, weekly resistance 1 is at 785, just above our second level of daily resistance, and also the monthly pivot is at 785. So should we see a big rally, there's a lot of resistance between 781 and 785.5, just to take note. If we did break over 785.5, we're actually bullish on a monthly time frame. Also, I just want to point out, anybody who looks at charts, or especially Japanese candlesticks, we see right here, it's almost a classic gravestone doji. A gravestone doji looks just basically like an upside down T. We had this early strength, and then the market closed right back down to the point. It actually closed lower than the open. So what that indicates is that we had this rally and it failed, and then sellers came into the market, and the market closed just slightly lower than where it opened. Not a real good sign in an up market. It's actually showing weakness in this rally that we've had over the last week. If the market can't get over 759.5, now we closed at 754. If we cannot get over 759.5, if the market is weak, we might get a pretty nasty sell-off on Tuesday. You might want to take notice of the second level of support as opposed to the first level of support. I don't like this formation, this gravestone doji, while we're in the midst of this rally that we had over the last week. So if you're looking for any kind of support, I would look at the second level of support, not the first. With regard to economic numbers coming out, 8:30 a.m. Eastern Time, building permits for the month of February, the expectation is 500,000. Also at 8:30 a.m. Eastern Time, housing starts, the expectation is 445,000. Once again, all these numbers are at 8:30 a.m. Eastern Time. Core PPI, the expectation is an increase of 0.1%, and PPI, the expectation is a rise of 0.3%. That's all I have for this evening. If you haven't gone to my website as of yet, it's placefortraders.com. I encourage you to go on there and sign up for the free alerts. Thanks a lot.